What's going on, everybody? In today's video, we're going to talk about how to make a trading plan and why it's needed in Forex. Now, would you go to the casino without a limit on how much money you want to lose? Would you ride a bike without tires? Would you snowboard without ski goggles? You're going to understand the hard way or the easy way why trading with a trading plan is probably the most important thing to have in your arsenal. Trading plans tend to be geared to a certain style of trading. So, whether it's swing trading, intraday trading, scalping, these are trading styles we'll cover in the next video that I want to release. But your trading plan is going to be geared towards your style of trading. What I will say for the style of trading, I want you guys to make sure you have a separate account for each, okay? We'll cover this again, like I said, in the next video, but it's important to know that your trading plan is subjective to the trading account and trading style that you've implemented, okay? So while you're making your trading plan, it's also important to have a specific watch list that is congruent with your trading plan, right? So if you're a scalper and in your trading plan, it says that you should only be watching two pairs, let's say it's pound dollar, euro dollar, then your watch list is meant to be small because you're scalping, right? If you're a day trader and you want to have like say 6 to 8 pairs, then it's important that you write in your trading plan that for that trading style, you're going to have 6 to 8 pairs that you're going to work with for the week, okay? And the latter, if you're a swing trader and you want to have, say, 16 pairs on your watch list, it's important that you make note of that in your trading plan and say that you're only going to look at those 16 pairs for the week or for the month. Now, your trading plan should include entry criteria. This has to be congruent with a strategy that you learned, whether it's like a break-in retest or a continuation or a reversal. There's different ways to get into the market, and every trading plan has to include entry criteria, right? So say you trade EMAs. In your trading plan, it'll say that you only enter a trade if you see a candle has broken the EMA to the upside or to the downside. Let's say you trade supply and demand. In your trading plan, it should say that a trade is only taken if price enters and rejects your supply or demand area, right? So this would constitute entry criteria within your trading plan. Now on the other side, every trading plan should include exit criteria as well. So this is specific risk to reward targets, specific pip counts, liquidity targets, trading zone to zone, right? As you can see, there's different ways that you can implement your exit criteria as well. And it has to be congruent with your trading style and your pace, and it has to make sense in your trading plan. These are all things you have to include, okay? In your trading plan, you also want to implement specific risk management parameters. So whether the objective is to flip the account or steady growth on the account, you want to stick to specific risk size that you're implementing in your strategy and have it written in stone in your trading plan. The account size difference is going to be a big factor in how you risk on your account. So if you're flipping small accounts from like $100 to $1,000, your risk is going to be higher. If you're someone who prefers steady growth, say you have like a $10,000, $25,000 account, you want to risk 1% per trade, then you can go for that as well. Just make sure that you state it in your stone on your trading plan how you're going to be risking your capital. I also think it's important to include a daily loss limit in your trading plan, because whether you're trading personal or funded, if you don't have a daily loss limit, it's easy to overtrade, okay guys? I'd say it's even more important if you're trading funded, because you automatically get cut off after 5% daily loss, so you want to avoid that at all costs. When it comes to like actually putting your trading plan together, you really want to emphasize the importance of risk management, okay? Within your trading plan, I also think it's important to implement time and day restrictions. So this was something I had trouble with early in my trading. It took me a while to realize the days that I was more profitable and the days I was less profitable, okay? So typically in the Forex market, you want to look out for Sundays just because the spreads are insane, okay? You'll learn the hard way if you don't listen to me. Trading on Sundays, the spreads are going to be crazy. Typically, there's no volume till Monday in Asia. So I try to avoid Monday mornings if I can. sometimes there's good moves on Mondays, but not all the time. It's not as often. And also Fridays are a little low volatility, also depending if there's any news releases, right? So our fundamentals are important. I think having time and day restrictions within your trading plan will only contribute to your overall profitability. It'll keep you out of the days that have low volumes or manipulations, and it'll keep you in the best trades and out of the worst. It's also important in your trading plan to make sure that there are fundamentals specifically that you want to avoid, okay? So whether it's CPI news, FOMC, NFP, the big red news folders that move markets for real, like midweek, you definitely don't want to be involved in them. I would just wait until after they happen to see if there's a trade setup, but make note of all the fundamental news for the week in your trading plan that you want to avoid, because it's easy to forget to check your fundamentals when you're getting up to trade in the day, whether you're distracted at home or with your job. You know, sometimes you miss the fundamentals, so just make note of them and always remember to check what's going on for the week. So quick summary of the things you need for your trading plan, okay? Number one, it's going to be geared towards a certain style of trading, right? So intraday, scalp, swing, you want it to be geared towards your style of trading. Two, you should have specific watch lists depending on your trading style. So whether you're scalping, intraday, swing, the amount of pairs you have per watch list are going to increase depending on how high of a time frame you're looking at, okay? So number three, you're gonna have entry criteria. This is typically derived from the strategy that you learned. It could be a break and retest, it could be continuation, it could be a reversal. You just want to have specific entry criteria that need to be met for you to get into a trade, okay? Number four, you're going to want to have exit criteria as well. So specific risk to reward, targets to be met. These are things that get you out of the trade once you're in the trade. So these are just targets to be met, okay? Number five, you want to have good risk management on your trading plan, whether it's, you know, for flipping, for steady growth, whatever your objective is on the account, you want to have very set in stone risk parameters, okay? And number six, you should have time and day restrictions, days that you don't want to be in the market. Make note of them. Just don't go towards them. You know those days are bad for you. Be as honest with yourself as possible, and you'll see a lot more profitability, okay? Number seven, in your trading plan, you should also have fundamentals that you want to avoid, right? Big news events, big no-nos, things you do not want to be involved in the market. It's going to be a lot of volatility. You're probably going to lose money, so just trade safely, okay, guys? Thanks for watching, guys. If this video provided you with some value, please hit the sub, hit the like. We'd really appreciate that. I'm new to this YouTube thing, so I'm just going to keep cracking at it. Hopefully we can get the sub count up. If you guys wanted to get some free resources, I also have a free ebook and a free Telegram community where you guys can network, share trade ideas, learn collectively as a community, and strive to make some profits. Thanks, guys.